Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Got a couple of interesting momentum stocks to tell you about this time around with Mike Vodicka, our momentum stock strategist here at Zacks.com. And the first one that you want to talk about probably needs no introduction as far as I can tell. Neflix Incorporated, NFLX, the ticker symbol. I don't know if too many people who don't know what this company does.
Yeah, it's definitely a high-profile name, and this has been one of the hottest momentum stories that we've seen for the last 3 to 6 months. Shares have been ripping higher, hitting new all-time highs, every other week. It's a hotly debated stock too, because there's lots of questions about the sustainability of their success or the sustainability of their business model.
I bet.
And also, too, there's conversations about the valuations. But from a fundamental perspective, the company looks really strong. We saw really great fourth quarter results in late January, and revenue was up 34% year over year. And they also produced a 23% earnings surprise, so they were hitting hard on both fronts. The primary driver of the quarter was just as simple as subscription-based growth, and they saw pretty unbelievable year-over-year growth. Their subscribers were up 63% year-over-year, and they're now above 20 million. So clearly, this is something that a lot of people are jumping into.
Yeah, it goes to ease of use for the consumer. You don't even have to walk to your mailbox anymore.
Absolutely.
Working with this company.
Yeah, I know. I mean, the new online stuff they're doing has been really big for them, and that's pulling a lot more customers in too, so that's a good point. They actually, an interesting point about the quarter was that they didn't offer forward guidance. Usually when that happens with the company, the analysts tend to don't like it, or the street doesn't like it very much, but this time around, Neflix seems to have gotten a free pass on it because there is so much upward momentum right now, so that is kind of a story for everyone to keep their eye on. Company does have a strong financial profile. Cash and equivalents are up 60 million year over year to 194 million, so that'll give them flexibility to grow in the future. We didn't see a whole lot of movement in estimates off the good quarter. The current year is up 6 cents to $4.33, and the next year estimate is fairly bullish. Analysts are looking for 43% growth, so that's a pretty solid number right there. Valuation picture, PEG ratio is just a little bit over 1, and traditionally that's a benchmark for value. So running back to the valuation conversation is, it doesn't look very overvalued here, even though shares are up big. And then you take a look at the chart. Once again, a new all-time high at 247.55. So this is a serious momentum stock right now, no doubt about it.
Okay. And whenever I say this company's name, I always get this mental picture of, maybe this should be a sitcom or a cartoon. The Andersons Incorporated, ANDE is the ticker symbol. With a name like that, you wouldn't suspect that they're in the agricultural business. That's
right. You're an agriculture player, like you mentioned, and I've kind of been hammering the agriculture story lately in momentum, but it makes sense because this sector is really hot right now. The Andersons are a little bit of a smaller name in the space, market cap of only about 900 million, so it technically would be a small capper. But again, this ties into the agriculture story. There's major food shortages globally. We're seeing the price of corn, beans, and wheat trading at multi-year high right now, and that's producing lots of gains for the Andersons. Their fourth quarter results recently, just February 9th, revenue was up 31%, and they had a big 53% earnings surprise, so that was a big number that they posted. And they saw strength in all their different segments. Their agribusiness was strong, their rail business was strong, their crop and seed protection business was strong, so all their different segments did really well, and they came together to produce a really nice quarter. Getting into their financial profile a little bit, cash and equivalents of $41 million, and they're paying down their debt. They're reducing their their interest expenses. Total debt was down 42 million year over year, and it's at 277 million right now.
Okay.
We did see some decent movement in estimates off the quarter. Current year is up 16 cents to $3.59, and then getting into the chart a little bit here. Shares jumped really nicely off the good quarter. They gapped open higher, and then we hit a new 52-week high. So again, a nice momentum story.
Do you own either of these two?
No, I don't.
All right. Check out more Zacks Rank Buy stock picks, ideas in all of the different categories that we write about on Zacks.com. Right on our homepage, upper right-hand corner. We put 4 new ones up there for you daily. In case you didn't know, Mike's category Momentum is included. With Mike Vodicka, I'm Terry Ruffalo.